In the modern futures markets, capital is a tool, but edge is the weapon. Prop trading gives skilled traders access to capital without risking their own money. But passing the challenge isn't a game. It's a controlled experiment in rule-based discipline and automation logic, run at scale. This is not gambling with leverage. This is structured speculation, where traders rent capital with performance. This guide breaks down the full structure of proprietary trading as it applies to U.S. futures markets, funded accounts, and automation-first strategies using systems like TradeRx and Doctor Markets. It's not abstract theory. It's the working blueprint. So, what is prop trading? Proprietary trading is when firms use their own capital to back traders. These traders aren't managing client portfolios. They're deploying firm money to generate returns, splitting profits through performance agreements. In futures, this often starts with simulated evaluations, followed by funded live accounts. Traders must pass risk-managed challenges to prove consistency before gaining access to real firm capital. Firms profit from both trader performance and evaluation fees. Why choose futures over other assets? Because futures offer tight spreads, deep liquidity, and regulated venues. They run nearly 24 hours a day and settle to centralized exchanges like CME. ES, NQ, and Gold are the most liquid contracts, transparent, measurable, and ideal for prop firms to monitor edge development. Here's how funded accounts work. In the evaluation phase, traders face strict mechanics. A $50,000 account may require a $3,000 profit target with a $2,500 trailing drawdown. Rules ban weekend positions, news trading, and oversized contracts. Pass the evaluation, and the account becomes funded, but still controlled. Most remain simulated until payout conditions are met. Traders must show consistent performance over at least 10 trading days. Proprietary risk software, similar to TradeRx, dynamically manages exposure. Profits above a set buffer are eligible for withdrawal on strict schedules. At the core of prop firms are risk rules. Daily loss limits, maximum position sizes, and consistency requirements matter more than strategy. Firms don't care how you win, they care if you break rules. Time windows matter too. Even though that futures trade nearly around the clock, most prop firms restrict access to 8:30 to 3 o'clock Eastern. Overnight trading is often prohibited. This is where automation changes the game. The best traders don't react emotionally, they execute systematically. Automation is not just bots placing trades. It's logic enforcing discipline. TradeRx filters entries to high-probability setups under volatility checks. Doctor Markets grades market regimes and restricts trade logic in chop conditions. Stop loss, targets, and trailing logic must be coded in advance. Let's take an ES evaluation as an example. A $50,000 account with a trailing drawdown of $2,500 and a target of $3,000 can be managed with 2-to-1 reward to risk. That means a $250 stop and a $500 target per trade. Maximum of 5 trades per day. Only in high liquidity sessions. TradeRx blocks trading after 2 consecutive losses, preventing spiral drawdowns. Different markets need tailored strategies. ES favors mean reversion in the morning range using VWAP filters. NQ is volatile and directional, requiring trend-sensitive automation. Gold is news-sensitive, best avoided around major reports, with trading logic restricted to high liquidity sessions. Failure points are everywhere. Overtrading after losses, ignoring trailing drawdowns, or scaling too quickly. Automation removes decision fatigue by enforcing stop times and logging outcomes. Every trade must have a rationale, not just a win or loss label. How do prop firms make money? Not just from profit splits. Evaluation fees, resets, and late-stage failures are major revenue streams. Many firms also receive data rebates from broker integrations. Traders must remember, this is a business system, not just a simulator. That's why serious traders need a robust technology stack, multi-timeframe charting, real-time order routing, performance journaling, and automation infrastructure. TradeRx provides filtering and error prevention. Dr. Markets classifies regimes. Together, they enforce structure. The future of prop trading is automation first. Firms now score traders on consistency metrics, not just PL. Latency, time in trade, slippage, and volatility exposure all matter. Manual inconsistency is being phased out. Prop trading is not about beating the market. It's about surviving long enough to monetize edge. Funded accounts are access points, but automation and discipline are the gatekeepers. For traders serious about automation-first funded trading, explore more at technests.ai.